Hey everyone, it's Peter from Argo. We've just put out an RNS with some very significant news, a press release with some very significant news, and I wanted to walk you through it. In short, we have sold the Helios facility to Galaxy Digital. We've also signed a hosting agreement with Galaxy to keep the machines that we have at Helios hosted by Galaxy. And we've also signed an equipment financing deal with Galaxy to finance those machines. And to pay off essentially all of the debt that we currently have with NYDIG. So I'm going to walk you through the transaction. It's obviously very significant for us, and I'm going to get kind of into detail with the RNS as I usually do. But first, I want to say that I think this is a good outcome for us. It was not an easy decision to sell Helios. It's been an important part of our strategy, our vision, our heart and soul over the last few years, over the last couple of years. But that being said, given the state of the market, given the position that we've been in as a company, we feel like this allows us to live to fight another day, and improves two of the biggest challenges that we faced in Texas. One is obviously the debt load that we have, that we had with NYDIG. And secondly, the cost of power in Texas, which has been a challenge for us and which was obviously one of the reasons we went to Texas. And I think this deal puts us in a better footing for both of those. But before I get into the details of the deal, I just want to kind of go back in time and review a little bit about how we got to the position we're currently in, and just kind of talk through the last few months. So obviously it's been, as I said, a challenging time for the industry. It's kind of a perfect storm for Bitcoin mining with high energy costs and low prices of Bitcoin. We opened our facility kind of right as that storm began in Dickens County in Texas, our flagship facility, right as energy prices went up, mostly driven by the war in the Ukraine, as well as some of the heat that was experienced in Texas in the summer. So electricity prices in Texas were more than double than what they normally were, and that made it hard for us to sign a fixed price PPA and kind of take advantage of some of the opportunities around ancillary services, et cetera, the demand response that we were expecting to in Texas. All of that meant we had to buy electricity on the spot market, and that was a challenge for us. At the same time as that, the price of Bitcoin fell significantly. Today it's somewhere around 17,000. I think, as most of you know, a year ago it was more, like 55,000. So this has obviously affected the amount of revenue that we've been able to bring in from our Bitcoin mining efforts. And at the same time, the global hash rate has continued to climb as more and more machines have come on. There's been a few dips here and there, but for the most part, it's continued to go up. And that's obviously impacted as well how much Bitcoin that we've been able to mine. On top of that, we've had a macroeconomic environment which has slowed down, which has made raising money in the capital markets as a publicly traded company much more challenging. And so that's kind of been the position that us and some of our colleagues and peers in the publicly traded cryptocurrency mining sector have been facing. Late to September, we saw this kind of situation that we were in, and it became clear that we needed to explore various financing and restructuring opportunities or options. So we hired external advisors, both on the legal side and the financial side, and began a process of trying to look for ways to put us in a better position. In early October, we issued an RNS that we were restructuring our debt with NYDIG, and also that we were raising additional equity capital. Unfortunately, those negotiations fell through. Market conditions continued to deteriorate, and that also obviously put us in an even more challenging spot. Just a sidebar, I've been asked many times why we announced the non-binding LOI before we had finalized the deal, and the short answer is that we had to. As a publicly traded company, we had an obligation to update our shareholders about our financial position, regardless of whether the deal was finalized or not. So that was what we had to do. And yeah, moving on from there, after evaluating various financing options, we decided really the only viable path forward through the extended bear market was to look for opportunities to sell the Helios facility and use those proceeds to reduce our debt load. And ultimately, this is what we have done and what we are announcing today. So let me walk you through some of the details of the transaction. We've sold the facility to Galaxy Digital for $65 million. We've also established a new secured equipment finance loan with Galaxy for $35 million. We've used the net cash proceeds from that sale and the new Galaxy loan to pay off the debt that we owed to NYDIG and a tiny bit to another secured lender. And all of that added up to about $80 million. And all told, we have reduced our debt load by about $41 million. Obviously, those are all US dollars. One thing I want to emphasize is that although we have sold the Helios facility, we haven't sold any of our mining machines. Those are going to continue to mine at the Helios facility. And if you add our Quebec machines together, our total hash rate capacity for our fleet is about 2.5 exahash, which will continue to mine. The third key part of the deal is that we've also signed a hosting agreement to keep our mining machines operating at Helios. And obviously, we designed and built that facility. We know it very well. It's a state-of-the-art immersion facility. We still believe that it's one of the best environments to mine in. And we'll also, by staying at Helios, it will also allow us to continue to access power through the Texas grid and participate in the ancillary services which are provided by ERCOT. In terms of why Galaxy, we had multiple parties that were interested in acquiring Helios. We chose Galaxy. We're excited to work with Galaxy and have Helios owned and operated by Galaxy. We've had a good relationship with them for quite a while. They have a very good reputation in the space. They're established, they're institutional, and we believe they're going to be very successful long term. And we think our mining machines are going to be in good hands with them at the Helios facility. In terms of our communications and my communications with the market over the past few months, I know some of you have been wondering and have been asking on social media, where I am, where's Peter, where's the news. In short, we've been working to get this deal closed. It's been a sensitive deal. We've been in a tough place. It's been very hard for us to communicate because of that, as for obvious reasons. So it was not appropriate for us to put out information to the market while we were going through the negotiation process and while things were still in progress. I do hope this announcement will ease some of the uncertainty and about Argo and answer some of your questions that people have had. And I think 2023 is going to be an interesting year for Argo and an interesting year for the space. Obviously, we've been through bear markets before as a company. Sebastian and myself remember quite well 2019, early 2020. And so, this is part of what it means to be a Bitcoin miner. There are cycles, you go through them. And the key is to do well when things are good, and then to make sure that you're able to, continue through the hard ones so you can get to the other side. So kind of looking forward, what does this mean for Argo? As I mentioned, our machines at Helios are going to stay put. We'll be under a hosting agreement with Galaxy. With their trading expertise, their balance sheet, Galaxy intends to put in place a fixed price PPA and enable Helios and our machines to participate in the demand response programs offered by ERCOT. So that's a very good thing. In Quebec, we'll continue to operate our two facilities there, one in Mirabel, one in Baie-Comeau. They have access to low-cost hydroelectricity. We have some room to grow our mining operations in Quebec. We're going to focus on making sure that those facilities are continue to operate efficiently and operate at a high level. So that's a lot. It's obviously a big moment for us as a company. Again, I think this is a good outcome for us, and now allows us to continue to operate, continue to be a participant in securing the Bitcoin network. We still own our fleet of machines and can mine with those. We've reduced our debt load and our monthly debt service obligations, which were very onerous under our last financing deal. And all of this means that we are in a better position, to continue our operations through the bear market and get through to the other side. So I want to thank everyone for watching. Thanks for your continued interest in Argo. It's never boring around here. We appreciate your support. We appreciate your questions. We appreciate your criticism. It's challenging times for the mining space in general. And we do feel like we're in a better place now than we were a month ago, 2 months ago, 3 months ago. All right. Thanks, everyone. Happy holidays. Happy New Year. And as always, onwards and upwards.